Sir, you can't remove someone like that.
Come again?
You can't remove someone like that who's trying to waste our time.
I'll remove anyone who does that now. Guys, I'm going to repeat this for the last time. When you come into this Zoom, your only job is to hold your notebook and your pen and take your notes. You are not here to explore whatever how the Zoom works, please. Because now you're disrupting us. It's almost 10 minutes. It's gone. It's gone to waste. You're wasting my time. I'm being honest with you. I work with time. I've got other people that I need to attend to. And I'm here for you. But when you guys do this on your own, what do you want me to do? Please, I'm begging you, do not do this. Please, because when you write something on the side, I'm unable to remove it from my side. I can only remove things which I'm the one which I wrote it myself from my side. You understand what I mean? Whatever that you write on your end, you have to erase it yourself. So when you write something on my screen is already full of your stuff that you wrote, which is meaningless. So what am I supposed to do? So please, I'm begging you guys, don't do that. Please. As I was still explaining here on an uptrend, I said to you, we've got in terms of market structure, this is what we have. Okay, just a quick one. I just want to check if I muted all of you. Okay. As I was still explaining, right, on an uptrend, we've got what we call higher high, right? As the market is continuously going to the upside direction, creating another higher high, right? Higher high, and then higher high again at this point. So when the market creates a pattern, what we call an M pattern, an M pattern is as easy as when you are writing M. If you know alphabets, right? And you know what is M. An M pattern is the same as when you are writing M. So these are some of the characteristics or some of the factors of confluence that the market uses when it's about to reverse, right? I then said to you yesterday, in order for the market to break the structure on an uptrend to then begin what? To begin a downtrend, this is what happens. The market will then pull back and create what we call a higher low. And then after, they will then create what we call a high, right? After this high, for the first time, as you can see previously, the market has never traded below the higher low. Remember, these are higher lows point. The market has never. So the minute the market trades below this higher low, it simply means that the structure, it is broken at that particular trading session. But now it does not only end there, right? I then said to you, today what I'm trying to teach you is the patterns, what we call market patterns. Your head and shoulder, your inverse head and shoulder, your M pattern, your WM pattern, your diagonal head and shoulder, your diagonal inverse head and shoulder. So these are the patterns that I'm trying to teach you. So we started with the M pattern at the end of an uptrend, right? I then said to you, this is what the market is most likely to do when it forms the M pattern, right? It will then get at the end of an uptrend and then creating this high, they will then pull back a little bit and then come back into the zone to create what we call equal highs. So this is the most perfect M pattern that you can ever find in the market, where the market has done what? Has created what we call higher highs, right? Equal highs at the top. So these are equal highs. And then when they pull back into the zone, this is higher low. I hope you guys understand that part, right? Now, I then further said to you guys, it's not always the case where the market will give you equal highs when it is forming what? When it is forming an M pattern. So sometimes this is what the market will do. It will then pull back into this previous higher high at this point. It will pull back and create a higher low. And then as they come back, they're never going to go back and create equal highs. They will trade a little bit lower than the previous higher high, and then they pull down, right? When they pull down this particular zone, it will then be called what we call a neckline. this one. It will then be called what? A neckline. This zone is called the neckline. This one. When the market breaks from the higher low, because this is the higher high, and then this is the higher low, and then as the market is coming back to this zone, this one, this zone, it is what? It is the higher low. So that higher low area, it is the neckline. Let me put it in this way so that you guys can understand it better, because I just want to make sure you guys understand this, right? So this is how an M pattern is formed. So this M pattern, I want you to understand this. An M pattern is a reversal pattern in the market. At the end of an uptrend, it's a reversal pattern at the end of an uptrend. So it is only formed at the end of at an uptrend, at the resistance area. You're never going to find it at the support. You're never going to find it in the middle of the trend, unless if the trend is about to change. That's what's going to happen. So this is what I said. The market is coming from a downside. It will again create a high high, and then create a higher low, and then create a high high. Then it breaks, retests, and then it continues to go down. This is an M pattern. But inside of this M pattern, there is what we call market structure. Are we together? Are you guys catching up? Are you guys following with me? Let me know if you understand what I'm trying to explain, right? So in terms of market structure, this is what's going to happen, because we're coming from a market which was creating higher highs, higher lows, higher highs, higher lows, right? So this is going to be the higher high, and then this is going to be the higher low, and then this is going to be the higher high. And then this is going to be the lower low, which the market broke the structure from this zone. Then this is going to be a lower high. Then this is going to be the next lower low. Coming from the other side, previously, so this is what's been happening. I know you guys are going to say I combine it very easily because I've got experience. I've been doing this for years, right? So this is how the market has been coming. Higher high, higher low, higher low, and then higher high, right? So this is how it comes about. So it came from the uptrend that we were talking about yesterday, which is the higher high, and then higher low, higher high, and then higher low, and then higher high, higher low, and then that's the higher high. So when the market is about to change the structure from an uptrend into a downtrend, because this is what the breaking deal was, right? I said this is the neckline zone. So this is an M pattern. So here is another scenario that I said, right? That I tried to explain to you. I said to you, this is not how the M pattern is always going to be formed. I don't want you to be glued to the fact that we're going to always have equal highs. So sometimes the market is going to create this. It's going to trade a little bit lower from the previous higher high, which is this one. So when the market trades a little bit lower before the higher high, it's going to be a high. This zone is going to be called the high. So it's either they're going to go and create an equal highs, or they're going to create they're going to create higher high and higher low. Another worst case scenario that could happen is that the market could still create something like this. So you should be open-minded. Don't be glued to the two things that I taught you. You should be open-minded all the time. So the market can still create something like this. You can still see the market create something like this, right? So when the market is going to create what? It's going to create, this is going to be a higher high. And then this is going to be a higher high again. Because why? When you look at here, it traded above the previous higher high. Is this still an M pattern? Let me know in the comment section. Does this still looks like an M pattern? This one. Does this still look like an M pattern? It is, right? It looks like an M pattern, right? Correct. Now I've showed you how the market creates a reversal from an uptrend. Now I'm going to twist it around from a downtrend to show you how the market most likely to create the pattern from a downtrend, then begins what? An uptrend. Now, let's say the market was creating, here is the lower low, lower high, lower low, lower high, and then lower low, lower high, lower low, right? Let me end it right here. So this is the market structure, right? So this is going to be lower low, lower low, lower high, lower low, lower high, lower low, lower high, right? And then this is the next lower low. So whatever that the market is going to create, I said the other one that I was talking about, it was an M pattern. And now the one that we're going to be looking at is going to be a W pattern. There's a difference. Whatever that you find at the resistance, it's an M pattern, right? It's an M pattern. Whatever that you find from the resistance, from the support, it's a W pattern. Are we together? Did you guys get that? We've got a resistance, we've got a support area. Whatever that you find at the resistance, it's an M pattern. Whatever that you find at the support, it's a W pattern, right? Now, let's continue with what we're talking about. So now, when the market will then begin, when the market forms the W pattern from the support area, this is what is going to happen. So this is the lower low. So the market will pull back, right? Go create what? Go create a lower high. And then as they come back, they're going to come and create what we call equal lows. So these are equal lows. Right? After creating the equal lows, what will then the market do? Then the market is going to leave this particular zone, and then they're going to go and create what we call a higher high. This zone, again, right here, it will then be called a neckline. So this is a W pattern. It's a reversal pattern because it is formed at the end of a support, at the end of support zone. Don't forget, this is the first case scenario that the market could do. What is the next case scenario? The next case scenario could be that when the market approaches this zone, right, it will then do what? This is the lower low. It will then pull back, create what we call a lower high. After this lower high, they're going to come back, create what we call a low. It won't be a lower low because this is the previous lower low. In order for the market to create a lower low, it was going to do what? It was going to trade below the previous lower low or trade equally. So this is the first scenario, which it could create a new lower low. It has to trade below the previous lower low. If it fails to do that, it simply means that it has to do what? It has to come back from the very same point of the previous lower low. If it fails to do that again, and then it trades above the previous lower low, then this area is going to be called a low. It's not a lower low because it failed to measure the price and it failed even to break even from that price. So it will then be called a low because this is the lower low. 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 But then this one is called a low. Now, immediately when the market trades above this previous lower high, this zone, it will then go and create what we call a lower high. I meant to say a higher high, sorry. And it will then go and create what we call a higher high. It means the structure is broken. There is a beginning of an uptrend. This is how the structure changes from a downtrend into an uptrend, and also changes from a uptrend into a downtrend. I don't know if I'm making sense. Let me know in the comment section if I'm making sense. Am I making sense? Let me know in the comment section, guys, if I'm making sense. Now I'm going to show you in two different ways at the same time so that you guys can understand, right? I'm going to erase everything and I'm going to show you in two different ways at the same time so that you guys can catch up everything, right? Catch everything. So here is a downtrend right here. And then here is an uptrend. We're just going to start from here. I'm going to create it from here to here. Okay. Oh, God. Okay. So remember, when the market is going down, it moves with lower lows, lower lows, lower lows, and then lower lows, right? Lower highs, and then lower highs as well. When the market is going up, it moves with what? It moves with higher high, and then higher low, and then higher high, and then higher low. And then this, I'm going to put it as a higher high, right? Now I'm going to show you all these patterns from the downtrend into an uptrend, and from an uptrend into a downtrend at the same time so that you guys can understand, right? I'm going to use the equal lows. I will then use what? The equal lows. So this is what's going to happen. The market is creating equal lows. It's going to pull back into the zone and then pull back again, create another equal low, and then go up, create another higher low, and then higher high, higher low, and then higher high, right? Now let's come back and label it. So this is going to be another equal low, and then this is going to be a lower high. Let me do like this. So this is going to be the neckline. Don't forget, this is a neckline, right? This is the neckline, but at the same time, there is structure in it, right? This is going to be a lower high. And then this is the first higher high. This is the second higher low. This is the second higher high. This is the higher low. This is the higher high. Right? We come back into this one now. Right? So this one is going to be okay. So this one is going to pull back into the zone. This is the higher high. And then pull back into that area, create equal highs, and then pull back again at the neckline. And then as they break from the neckline, they go create what? A new lower low. After this lower low, the market go create a lower high. Lower low, lower high. And then lower low again. Is that clear? This is a W, M, W pattern, and then this is a M pattern. Don't forget the two difference. Do you guys understand? I need anyone who have a question based on what I'm teaching here. Don't ask me anything which is not related to what I'm teaching here. Right? I need anybody who have a question based on what I'm teaching. Raise up your hand. If you have anything that you want to ask me based on what I'm teaching, you raise up your hand, I'll unmute you. Make it snappy. We have to move to the next chapter. If you want to ask me something, please raise up your hand. I'll unmute you.
Okay, sir. Let's say the market was on the, let's say it broke as it was changing direction. Let's say it broke the higher low again, but it's still on an uptrend.
It broke what? Repeat.
In that, let's say the market was changing direction.
You must specify. You must specify. You must specify where we're coming from a downtrend or from an uptrend. You must specify.
Trend.
Come again.
We are coming from a downtrend.
Okay.
It broke the lower high, the neckline.
Okay.
Then created a higher high, then created a higher low. Then created a higher high, then created a higher low. Now, let's came down and broke that higher low.
It breaks that higher low. It's possible. It can do that.
And we are still on an uptrend.
No. Remember, I'm trying to teach you what is the market structure and how the market changes from a downtrend into an uptrend, right? But I do not predict what could happen in the market to say if the market breaks from this lower high and go create a high, create a high low, and then high, and then break. It is possible. The market can do that. Because then by then you will then know how to read the market structure. You will be able to identify that, okay, the structure is broken again. Because why? I said to you, when the market is going up, it constantly respects these higher lows. Immediately when the market, if it can pull up somewhere from this point and then break, it means the structure is broken again. You have to start looking for some selling opportunities. You understand what I mean? I'm teaching you how to identify where the structure breaks, whether the market is coming from a downtrend, how it changes and become an uptrend, and whether it's going on an uptrend, how it changes. I'm not saying whatever amount of touches I've drawn here, this is how the market is going to touch. No. You must know how to identify what we call market structure, higher high, higher low, lower high. And then those double bottom and those double top. That's it. Then you will be able to identify that the market is about to change the structure now. Are you guys, is that clear?
Noted.
Thank you. Don't count these lines, how many times the market created high highs and say the market, Lester said, is going to create 3 high highs. The first one, second one, third one. No, that's not how it works. You just have to understand how the market structure works. When the market continues to go up, it constantly respects these higher lows, It constantly respects these higher lows. The minute the market pulls back, trade below that high low, it simply means that the structure is broken. We might see a change of character to create a downtrend. That's it. That's what you need to understand. This is purely just market structure. Can I move now? Or Leroy, you still want me to take you? Let me take you. You're going to be the last person, right? I want to move. We still have a lot of things that we need to do.
Can you hear me?
Yes, my brother.
Yes. Okay. So I think what people are facing as a difficulties is the entry zone, right? So the moment you notice a W pattern, which is an uptrend, would you say the best zone to enter would be at the neckline, or would you enter?
Unfortunately, I haven't got there. You are fine now.
Okay, cool.
I haven't
no
got
stress.
to
No, it's fine.
To the
no, it's fine. It's fine.
I'm still just teaching about market structure and pattern.
Right.
Tomorrow, that's when I'm going to get in those things. How you find an entry way.
Thank
because
you,
I'm
boss.
taking you step by step. If I'm going to feed you with all the information, then you're going to have a problem.
No, it's fine.
Thank you. You guys understand what I mean, right? I don't want to feed you with too much information at once. Today, I'm dealing with patterns. Tomorrow, I'm going to combine the patterns with entries, with any factors of confluence that I could possibly put together so you guys can find an entry. Those of you who are here for that, right? Let me quickly erase everything. I hope we are all clear, right? So this was just one of the factor of confluence that the market is. Yes. So this was just one of the factor of confluence. We're going to go back again into the uptrend, and I'm going to show you what the market is most likely to do when it gets on the uptrend. We are still on the market pattern. I spoke about the WM pattern and the M pattern today, right? I'm continuing with those patterns. Okay, let's say we are trading on an uptrend again. So right now, what we're going to be looking at is the head and shoulder, right? We're going to talk about the head and shoulder. So the head and shoulder will be formed in this way. At the end of an uptrend, a head and shoulder, it's a reversal pattern as well. And it consists of market structure as well in it, right? So this is how it's going to be formed. So it's going to form a left shoulder when it's creating this higher high. I want you to get me right. This is going to be a left shoulder as it creates a higher high. We are still on an uptrend, right? Now, as the market comes back, this is what it's going to do when it forms a head and shoulder. It's going to leave this particular higher low. Let me label this. So this is going to be a higher low. So it's going to leave the higher low. And I'm going to go create a new higher high. Right? They're going to go do what? They're going to go create a new higher high. Don't forget, we're forming a head and shoulder, which is a reversal pattern, which is most likely to be formed at the end of an uptrend as a reversal pattern, changing from an uptrend into a downtrend, right? The market is going to go and create a new higher high, right? After this higher high, the market will pull back to the higher low, to this point. When they create this higher low, the market will then again leave that higher low and go create another high. Now this will be called a high. Then they pull back to this zone. Let me break it down for you, right? So this is going to be a high, this one. Why is this zone called a high? Because it failed to trade above this previous higher high. So this is the higher high, higher low, higher high, higher low, and then a high. This is a high because it failed to trade above this previous higher high. This one, it was the higher high previously, and then traded above it. It created another new higher high. I hope we are all clear on that one, right? Now, as they come back into the zone, they create another higher. Okay, let me tell you, for the third time, what the market is going to do is that we're going to have a breakout. So there's never going to be a higher low. There's never going to be a higher low in this zone. The market is going to continue to go down, trade below this neckline zone. This is going to be called what? A neckline zone. So they're going to go down, go create what we call a new lower low. I don't know if I'm making sense. So this, it's a left shoulder, is the head, and then is the right shoulder. So it is incomplete. It is called a head and shoulder. This is a reversal pattern. Now, remember what I said to you. I said when the market is going up, okay, I said to you, when the market is going up, remember this is higher high, and then this is higher low, right? Higher low, and then higher low, and then higher high, and then higher high again. And then this is a high, and then this is higher high. I'm going to tell you something which is a secret. Ne? I'll tell you something. If you've got ears, open your ears and listen to me very carefully. If you've got ears, open your ears and listen to me very carefully. You see market structure. Market structure plays a very huge, significant role when it comes to trading. If you're not going to understand, that's why you see everything that I'm teaching you, it has market structure inside. So if you're not going to pay attention to market structure, I'm telling you, you can know all these strategies, but if you don't understand what I'm teaching you here, you're not going to get it right, I'm telling you. Because you're never going to understand whether the market is still bullish or bearish, whether the market is about to break the structure or it's not about to break the structure. So let me tell you, if there's anything that you have to practice is market structure. I'll tell you something. When I was, I think I was at the 4th year, I knew so much about trading, but I didn't know about market structure. When I understood what market structure was and how it moves, everything changed in my trading career. So the truth that I'm going to tell you is that never plays with market structure, what I'm showing you here. If you don't have a book next to you and you are writing what I'm teaching you here, I can tell you this free of charge that you are joking. You are here to play. I'm telling you. If you don't have a book wherever you are and you are writing this whole entire information, this market structure thing, you are playing, I'm telling you. But let me continue. I said to you, when the market is about to break the structure from an uptrend, remember, it constantly respects these higher lows, and then these higher lows. The minute the market then trades below this higher low, I then said what? It must have broken the structure at that particular moment. So look at this. I said this is a reversal pattern, this. From an uptrend into a downtrend, right? So immediately when the market trades below the higher low, they go create what we call a lower low. What we then want them to do after creating the lower low, we want them to come back into the zone to create what we call a lower high, and then the market continue to go down, go create a new lower low, and then they pull back again, they create a lower high. How many factors of confluence that I showed you how the market changed the structure? I think about 4 or 5 now. I can't count them. You understand what I mean? So I'm trying to give you all the scenarios because you don't have to be glued to one thing. Because when the market approaches this particular end of an uptrend, you're never going to know whether the market is going to use an uptrend or is going to use a head and shoulder or is just going to use a market structure only. You understand what I mean? Whether the market is going to use the market structure only. Now, this is the head and shoulder. If you look at it in terms of market structure, this is the higher high, this is the higher low, this is the higher high, this is the higher low, this is the high. They broke the structure. They went and created a new lower low. After that, they created a lower high. After that, they created a lower low, and then this is a lower high. The structure is broken at that particular trading session. The professor, you raised up your hand.
Good evening, sir.
Please be quick, my brother. Get to the point.
Yes, sir.
Sure.
So let's say after the market creates that high, then it pushes down. Then it doesn't break the neckline immediately. Then maybe it pushes up a little bit. Then it breaks the neckline maybe after maybe 2 days or so, but it went up a bit. Would you still consider it head and shoulder valid?
As long as they never went back to trade above this zone, it's still a head and shoulder. Let me show you what you talk about. You talk about if the market comes back into this zone.
Yes.
But let me tell you what the market is most likely to do, what I've seen. So the market, if it does not want to break at this point, what it will do, it will consolidate in this zone and then finally break. But the minute the market can create another leg, because this is a leg, remember, if the market can go up and do something like this is no longer head and shoulder. You can just use market structure to say the market is traded below these higher lows. So what you would want to see, because this will then be an area of interest, you will then want the market to break, retest from that zone, then continue to go down. Are you answered? There's another one, Shepard. Shepard?
Yes. How are you?
Yes, I'm fine, bro.
I'm good, man. I would like to know, man, there's something that I don't understand. Like, let's say on 15 minutes, we do head and shoulder and we go, like, when it's going down, right? Then we create a W pattern to show that it is reversing. Then it reverses. Then it goes like it normally does in gold. Then it goes maybe 1,000 pips. But it still is, we hear people still saying we are still on a downtrend.
Okay, it might happen. I think I get what you say, right? Uncle, it might happen that the head, you say on a bigger, on some other time frame, there is a head and shoulder,
Yes.
right?
Yes.
And then on another time frame, there's a W.
Yes.
But yeah.
I mean, like there's a W to show that it's reversing, right? Then it reverses, it goes like 1,000 pips away. But on another time frame, we are still on a downtrend. But this other W is make a U-turn to say we are on a bullish trend.
Okay, remember, let me tell you. Remember when the market breaks out here, it can break up to this zone, right? And then there is a market structure which the market has to come back and retest back into. Do you understand that?
Yeah.
So from another time frame, when the market is about to make a reversal here, the market can give you a W because this is a reversal pattern. Going back where? Going back into this particular zone to retest. But this W, it doesn't mean that it changes the structure entirely. No, it's just a retracement. It's there to give you a reversal pattern for this retracement that's supposed to happen, come back into the neckline, then they continue. So what's going to happen is that you'll see that they're going to go up and then they come back and break that W.
Yes.
Do you understand what I mean? So another thing, I'm going to tell you at the end of this mentorship, I'm going to tell you something. I don't want to go into it because I'm going to confuse too many people. Now, this meeting is going to end in 1 minute. You're going to wait for 10 minutes, guys, and I'm going to resend the link. So what we're going to do, we're going to continue with the inverse head and shoulder on a downtrend. After that, I'm going to show you diagonal head and shoulder and diagonal inverse head and shoulder. Then we're going to be done for today. Tomorrow, I'm going to combine everything with supply and demand as well and entries. So I'm going to do supply and demand and entries. So do make sure that if you started with this mentorship from the beginning, don't miss tomorrow because that's where I'm going to be unleashing everything, unpacking everything, and then I put it together so that you guys can be able to use those information. You understand what I mean? So stay with me. Make sure that you come back. Don't go and sleep because it's very much important what I'm going to teach you. I hope you guys had that, right? I hope you had that, right? Everybody, guys, at the end of today's session, I'm going to open the group. All I want you to do, give a review about our today's session. Don't write your own things that I never asked you to do. Don't be off topic. Just write your review, how the session was, good or bad. Don't sugarcoat anything. If there's anything bad that you saw, write it. If there's anything good you saw, write it. That's it.